counselors, and she'll be presenting on homeownership and such.
Yes. Budgeting for homeownership. My name is Belinda Penberg. I see some familiar faces here in class, so great job. I'm completed the home ed education class and seeking to learn more. I've been here as a housing counselor for the last 2 years. I've been in the financing industry for a good 15 years now. I've been everything from a teller to a mortgage lender, a lot of in-between things. I'm happy to share this information, share it with all of you so that you can be a better homeowner. And just a few truths for you here. Home ownership is a long-term investment. It is achievable no matter your credit history. This actually, homeownership requires getting familiar with your home. No need to be an expert there, just observant. Know what to include when you are budgeting for repairs. And it can also be a rewarding experience when you plan ahead. So when you are a homeowner, the biggest thing that you can do for yourself is just creating those habits, just like Eileen was mentioning. You know, there's a lot of things that you can be doing to help feel prepared, ready for home ownership in general. That's the real basics of creating new habits, know what you spend, know where your money is going. Knowing your credit status, that's another one. We mentioned this here because credit is directly linked to your budget. Here, whether you have good credit, you're going to be receiving attractive loan terms. You will be refi ready. So when you come to a point that, if you're a current homeowner, and just out of curiosity, how many people here are current homeowners? Okay, wow, you have quite a bit. Okay, great. So being refi ready, that can be generally 2 good reasons that I usually recommend is a good opportunity or a good time for refinancing. That's going to be if you want to lower your rate, if you have a variable rate and you want to switch to a fixed rate. Those ARMs are out there, those ARM products, loan products are out there. So, having good credit, being ready for, when that term comes up, that's a good time to be thinking about doing a refinance. If you're looking to cancel maybe the PMI insurance that you've been paying, if you didn't have 20% down payment when you purchase your home, you probably are paying private mortgage insurance, and if you're coming to a point, watch for, the value of your home to see where it's at versus the debt that you owe. If you are close to 80% loan to value, then that's a good time that you may be thinking about refinancing. No credit. Know that credit building, credit cards and loans are out there available for you if you don't have any credit. I teach the homebuyer education class in Spanish actually, and that tends to be a pretty common problem, is just not having enough credit up there. Bay Lake Bank, Johnson Bank, Associated Bank, they all have these credit building loans and credit cards that are available out there. The terms are going to be different with each bank, with each product, but it basically is, if you don't have any credit at all, they are going to give you the credit that you need, that needs to show up on your credit report. There will be like a security deposit or possibly a checking account or savings account that may need to be opened and just to have some collateral there. Whatever that amount of the security deposit or that may be equivalent to the amount of the credit that they give you. Bad credit. It is something that you just need to be intentional on cleaning up. you know, no matter your credit history, if you're teachable, it's fixable. Sometimes this means being honest with the debt that you have. You know, own up to all the debt that is owed, you know, including the accounts that are not reflected on your credit report. This may be collections, it may be, you know, as a homeowner, maybe it's real estate taxes, or maybe it's private school fees, if you have children going to school, going to private school, you know, all of that not just what is reflected on your credit report, but all of those items. As a homeowner, you may come across street repairs that are being done by the city. That is something that, you know, eventually it catches up with you. So it's a matter of being honest with all the debt that is out there. And it's seeking guidance, learning strategies on how to correct the bad credit that's out there. Sometimes this means, you know, looking into knowing what your rights are as a consumer as well. Some credit resources here, if you're looking for that help in doing some cleanup. The CFPB, or Consumer Finance Protection Bureau, they are basically a regulator of rules and regulations. If you go to their website is here, their phone numbers available. They have sections online just to learn more about laws and regulations. If you're struggling to clean up your credit, if you feel like it's taking too long, you're not getting anywhere, kind of feel like you're spinning your wheels, look into that, because there's a lot of laws that are in play to protect you, the consumer. Submitting complaints, that's another option online, real easy. Go online and submit your complaint if once you know the laws and regulations, the procedures that are supposed to be followed. You know, that's another easy thing to do. It's going to be received by, you know, someone, you know, it's kind of like a guaranteed, you know, you don't have to necessarily write a letter and mail it in, and just always, you know, the waiting time and not knowing if somebody's responded. You know, you can check your to see where that's at, where the standing of that complaint is. Assessing risks as well. As a consumer, credit consumer, you can get information there as well that will help in assessing what your risk is when you're applying for credit cards. It'll help you compare things, compare loans, compare products. Credit Matters, that is a local organization actually based out of Appleton. They focus on credit repair and restoration. So, you know, it all depends on your preference. If you are more of a do-it-yourself type of person, you want to look into the rules and regulations, and do the work yourself and be really involved, and you have that willingness to do some learning, that's a good resource. If you just want it quick and done, and you're willing to pay for, you know, a cost up front, Credit Matters is a really reputable company. They actually keep up with you. You know, they keep you informed as to what the status is, what they're working on. There's a lot of different options in this area, because what they do is, you know, it's based on your personal situation. So if it's, you know, a matter of cleanup, or you're not getting the results that you want from working with a creditor, you know, they're really going to work hard. That's all that they do. So you're going to get quicker results through here. I love the status reports that they give too, to keep you informed of what they're working on, where they're at. You know, if what it is, if what you want is just help me improve my credit score, and I need it to go up by, you know, 60 points or 40 points, whatever that is, you know, they're willing to work with you. They take a good look at what your goals are, and work with that. And then we also have the homebuyer education class. So how many people have attended the homebuyer education class here?
Do you have any materials on, that credit repair? Do you have any brochures or anything like that?
I do have some cards for her, for credit matters. Renee Backus is the contact person for the area. She does come here quite a bit too. So typical cost to purchasing a home. You know, again, we're looking at the budgeting perspective. From a budgeting perspective, you're transitioning from being a tenant to an owner. You have your out-of-pocket expenses that you're going to be making. These right here is just an example of, there's really no way out of this. If you are intending on purchasing a home, starting from the time that you have that accepted offer to purchase, these are the expenses that you will be making. Your earnest money, $200 to $1,000. You know, your realtor is gonna let you know, maybe make a recommendation for you. I've seen as low as 200. Some realtors have recommended more, only because maybe they know that there's another pending offer or somebody else who's looking to make an offer at the same time as you, and they might say, well, bump up your, you know, your earnest money amount. It'll make your offer to purchase look a little bit more attractive. An inspection, $200 to $400 or so. An appraisal, $400 to $600. That's something that's going to be paid to your lender. Typically, they collect this money from you so that they can go ahead and order the appraisal. That expense, you know, as you're going through the process, all of these are not, they're not avoidable. They're expenses that you need to have that money already saved prior to starting the process. Homeowners insurance, 1 year of coverage, and reserves if applicable. Some lenders do ask for, you know, to show proof of reserves, that you have one to 3 months maybe of what your mortgage payment is gonna be. Closing day expenses. So all of this is up to the point from when you write that offer to purchase up until closing day. Closing day, this is what you can expect to pay. Down payment, 3 to 3.5% of purchase price. Now, that's a little bit, there's a little bit of flexibility in that. If you can pay more, great. You know, that is gonna help lower your PMI insurance that you're paying for, because you don't have the 20% down payment. You know, some lenders do have unique loan products where, you know, they can have what they call in-house loan,